Hi everybody, we are a tin developer listed on the ASX. This presentation has been put onto the ASX this morning, or this afternoon, so please have a read of the disclosure statements, which I'm sure you will after this. I do have to apologise to any of the geologists in the room. I don't think I've got one drill, assay or section in this. For everyone else, please enjoy. So yeah, we're a developer. We've got a mature resource basis and we're turning our 2 tin projects into mines, and that's the full focus of the company. We have not had a drill rig spinning on our deposits for over 12 months, and that's because we're taking these projects into development. We currently have a market cap of just under $200 million. We have Australia's largest tin producer and one of the largest globally listed tin producers, Metals X. It's 16% of our register, as well as having 2 board members. And we also recently had L1 Capital, one of Australia's leading resource institutions, come in and take a 20% placement in us. So we're very well placed, got a very good register, and certainly got the right supporters to take these 2 projects into production. Where are our projects? As we've already covered, very not bad places to go in the world of mining projects. We have our main flagship project in Andalusia in the south of Spain. That's about 2 hours out of Seville. And yeah, it is a greenfield tin deposit, open pit, and it's going to become the only tin mine in Europe. And because of our vertically integrated solution, we've got an option over a tin smelter 200 k's away. We're going to be supplying tin into the European Union. Again, there is no other primary tin supply in Europe, nor is there any tin supply into North America. Basically, the entire tin supply comes from developing nations and China. So for us, this is very strategically important, very well placed at the moment. And then we've got the Cleveland Tin project in Tasmania. It's a brownfield project. It did operate until 1986. We've had it for about 10 years, and we've been doing plenty of drilling and recently really focused on not only the tin that's close to the surface, but a very large tungsten deposit which sits underneath that. As I said, L1 came onto our register in February this year with a $30 million placement to take 20% of the company. They're a high conviction fund, and they came onto the register because they saw that we are the most advanced tin developer on the ASX and one of the few in the world. There is only about 6 or 7 tin projects in advanced development in the world. And tin is forecast to be in some very sufficient deficits. That money is going to go towards moving our flagship project through FID and into construction operations. It also covers the option agreement we have over the tin smelter, also in Spain, and then the Cleveland Tin project, which I'll take you through at the end. So yeah, very well funded, and certainly we are struggling to find ways to spend the money at the moment, which is a pretty good problem to have at the moment. Tin price is doing the heavy lifting for us. Tin price is sitting well up, close to $50,000. The definitive feasibility study we delivered last year for our Oropesa Tin project in Spain was done at $30,000. So obviously that's about a 67% premium, and certainly based on the really constrained supply of tin and tin concentrate into the market right now, it looks like it's set to stay there for a while with the lack of new projects that can even come in and fill the gap. As I said, we are a fully integrated tin solution for Europe. We have our Oropesa tin mine. We also have the option over the Roble Lledana, apologies to anyone who speaks Spanish, tin smelter 220 k's away, which will deliver tin ingots into the European market. One of the key reasons that this is extra interesting from a business case point of view is because there is a premium for tin deliveries in Europe. It's about $1,000 to $1,500 above the $50,000 tin price, and there's about a $2,500 premium into North America. So by producing tin in Europe, and that tin will naturally flow into both the European and North American markets, it certainly won't flow back to the non-premium markets in Asia. As I said, Europe's 83% of their demand comes through imports currently, so they're really desiring some domestic supply. Spanish government's coming to the party. They just put tin on their priority raw materials list. That's in addition to tin being on the critical raw materials watch list in the European Union. So certainly tin is very well placed. Tin is also on pretty much everybody's critical minerals list around the world. No surprise when there's no supply in North America, no supply in Europe, and very little supply out of Australia. As we said, I'm not going to show you any sections here, but here's a 3D model of our resource and our ore reserve. So again, one of the very few tin projects around the world that has an ore reserve. That's on the back of our definitive feasibility study that we delivered into the market last year. Talking about the feasibility study, the numbers I'm showing you here are done at $30,000 per tonne. The current price is $50,000 a tonne. NPV of our published DFS was $270 million NPV. Currently at spot prices, that's about $1.1 billion. So the tin market is very strong and our project's very well placed. All-in sustaining costs, $15,000 to produce our tin ingots. As I said, that's a very, very low cost compared to the current $50,000 tin price. So, and a less than 1 year payback to build the mine at current tin prices. So moving on to our second project, but one that's growing in the company's focus, is the Cleveland Tin Mine in Tasmania. It is in that mineralised rich belt in the northwest of Tassie. For those that don't know, mining is actually Tasmanian's #1 contributor to GDP. A little secret that the industry does down there, very strong industry and very passionate industry, despite the reputation that Tasmania is a bit, a green zone that people don't get in there and mine. They certainly do. Cleveland Tin Mine operated for 27 years, started in World War I, supplying the Allies tin supplies in World War I, and had another run through the 60s to the late 80s when the international tin price collapsed. But it's got a strong future. Why? Because it's got some very, very substantial resources. So it's still got about 7.5 million tonnes of tin resources in the old underground mine, which we have resourced up. We have about 4 million tonnes, just under 4 million tonnes sitting in the old tailings dam. These can be reprocessed at about a 50% recovery rate. But very interestingly, and certainly where the company's focus has been in the last 12 months, has been the very substantial tungsten resource we have sitting at the bottom of the old mine decline. We have 8.5 million tonnes of wolframite. In the tungsten world, wolframite is the type of mineralisation you prefer over scheelite. Ours is wolframite. And in addition to that, we have a very large exploration target of 32 to 90 million tonnes. Contained within that tungsten, we have other minerals. They're not part of the resource, so be careful how I say it, but we're currently doing test work and reassaying for rubidium, molybdenum, bismuth and fluorite, which we have announced the assays that they substantially intersect through this tungsten ore body. So very substantial critical minerals project, and we have all those minerals currently off at metallurgical laboratories, confirming how they upgrade, and we look forward to the back end of this year publishing that, as well as some further studies, most likely a scoping study towards the end of the year or into early next year. Here we are. Okay, here's probably the image just to the right is the one I will describe here. Effectively, that is the old underground mine with the old workings down there in the green. The big tungsten resource that the 8.5 million tonnes is the big purple shape you see there, surrounded by the light blue, which is the 32 to 90 million tonne exploration target. So accessible through the old decline, although the old decline currently needs to be dewatered. The red area you're looking at there is the tin resource, the 7.5 million tonnes. So basically, conceptually, we see this will be a two-phase mine life. It'll have a tin and copper. There is copper credits in that in the red zone, and there'll be a tungsten mine there coming into one life of mine plan. As I said, more detail of that in the back end of this year as we progress this through to a scoping study. Tungsten price, for those that, the tin price looks impressive, the tungsten price is even more impressive, and certainly you'd see in other listed companies like EQ Resources absolutely boom off the back of that. So certainly a lot of strength in our two key minerals. We've already done some ore sorting test work on that tungsten. We get about a 6 times upgrade from about 2.24 up to over 1%. So yeah, it's already showing great upgrades even before we do the metallurgical test work. As I said, all this will come together into a scoping study back end of this year. In terms of our register, 3 of our major shareholders there now hold 49% of the company. All of them have good bank balances, deep pockets to fund the company through our major project through FID and the Spanish project into construction and operations. That's my board, but I'm going to finish up because I think I'm out of time. Thank you.